Good morning. What in the fuck is that? Hmm. Weird. When's super secret Tootsie Roll DD? That's not a real thing. How's everyone doing today? JPM is saying crypto should be banned. I agree. It's not a good look to have your currency directly undermined by crypto bros of all people. It's just embarrassing. As a government and as a supporter of our government and society, I think they should. Fuck it. You're feeling better? You're no longer gray. A little bit, yeah. Thoughts on PayPal? I hate it. I think it's a value trap. I've spoken on it a bunch of times. Wall Street Bets has been trying to go long on it since it hit like $50. Actually, they were trying to go long on it back when it was at like 80, and then 70, and then 60, and then 50, and then back around. Warrior Weasel, welcome to Dillionaire, man. Thank you so much. Hit me up on the Discord. I'll get you added after the stream, dude. It's fine. They centralized it. That's true. Yeah. The ETFs will make it just turn it into a security, but I mean, it's still a security with no actual value. Wall Street Bets inverse always works. Seems like they're pretty bullish right now. They're always pretty bullish. It's hard to tell. You can't just you can inverse them directly on individual plays, but inversing their overall sentiment, yeah. There's this saying about that. It's like if you're bearish, you can't be wrong. If you're bullish, you can be wrong a little while longer. I forget who said it. Otherwise, I'd attribute the quote to them, but it's something along those lines. What's your thinking on nat gas going into next year? It's a good question. My first thought is I would like my Twitter feed to stop being clogged with nat gas bulls. That'd be fucking awesome. My second thought is it looks like a warm winter and Europe's pretty well stocked, so I don't see any particular reason for it to rise in cost dramatically. We might be entering, a period where nat gas is just cheap and easy to make, and reserves stay very elevated. I actually think reserves on nat gas are going to stay pretty elevated until the war in Ukraine is over. After that, I think there'll be less interest in preserving high stockpiles, and then we may see nat gas prices normalize a little more. Ban attack, welcome to Cornishon, man. El Nino saving the economy once again. I mean, preventing the other half of energy side inflation is kind of a big deal. Imagine if crude and nat gas were rocketing. Whew, fuck. JPAD would be hiding under Yellen's desk. Didn't that gas bulls know it's hot as fuck outside? I just assume they all live in Alaska. I don't know why there's so many of them. It is live. What's up, man? So Sardine, welcome to Dillionaire. If you guys, if you and Warrior Weasel hit me up, I'll get you added after the stream, so that way you're in the private Discord by tonight. Warden Buffalo's told me the market was going to go down at least 50 bips this week, but I'll believe it when I see it. Who the fuck is Warden Buffles? Is that like Warden and Buffett's child? I don't want to know. What about the future of fossil fuels after this year's climate change summit in Dubai? Or is that all just performative bullshit? It's mostly bullshit. I mean, green energy has the government subsidy support right now, but it's really not going anywhere nearly as fast as it should be. We're still a long way off from supportive electric infrastructure. I mean, I figure until we see trucking move electric, we're probably going to remain reliant, and so many other commercial products are reliant on petroleum. It's ridiculous, right? Like all of our plastics and jellies and creams, it's all fucking petroleum based. So we need it in the chemical industry, we need it for manufacturing, we still need it for shipping, and I don't see any of that changing in the next like decade. It sucks. The earth is going to get warmer, but we're still a long way off from replacing it. Apparently he's getting stocks or something, bought a lot of Coke and an apple. That's just his Monday night. Now that Tyreek Hill fucked my chances at $1 million, I don't know who that is. Is the market ready to crash and replenish my port? Do you own puts? Yes. When do they expire? Friday? This coming Friday or last Friday? I have to check because Popcorn Trader can't read calendars. I don't know how many the rest of you can. You still have theta? Okay, so sounds like market crash next Monday. Not tomorrow, but next Monday. Unless you roll your puts out. Is there a good chance that Japan will hike interest rates, or is it just a 50-50? I think there's a pretty good chance. I mean, so far the Nikkei leaks haven't been wrong, right? And the last leak was that Yuta is gonna move to a positive rate. I'm sorry, bag holder. You fell for it. It's your fault. There's only 6 more days of 2024. I bought a 4675p on Friday that expires tomorrow as a lotto. Am I gonna print? I don't know, but I'll tell you this much. That option will probably be cheaper tomorrow. I like that you tried to front run the overnight drop in futures. Maybe. I mean, there's a lot of delta that fell off the chain. We'll get into all of that later, but Man, the supportive flows coming in and buoying fucking a $1 trillion loss in Delta Friday morning is already unbelievable, right? We saw blocks come in on QQQ, IWM, and SPY that were in excess of like 200 million throughout the day. How does Japan have to raise their rates before the carry trade tanks? I mean, they're going from negative to positive. It's like a 300% increase if they go to 0.25. 300% increase against base margin that's been leveraged. Ouch. I mean, the important thing is how much leverage is being carried on the other side of the trade, right? If they're leveraging up that collateral like 10 to 1, even 0.25 hurts, right? That could be billions in losses. At least billions in margin calls. What will happen sooner, Treasury shorts or the unraveling of the carry trade? The greater leverage on both seems to imply that risk holders could be forced out more quickly than 2008. Yeah, well, 2007 is when the carry trade started to break down, before the GFC. Yeah, I would agree that they're both more leveraged, and there's a strong possibility that they have to break down a lot faster than we saw in the past. I mean, the rate of change in the swap when we watch it has been, I would say, more accelerated than what we saw when it started to break down in '07. But as the carry trade like breaks down and it's supported by the selling of assets, that starts to drop the value of those assets like MBS and CMBS and treasuries, right? Now, obviously, they haven't been selling off a lot of treasuries yet, but that could kind of be the next step. It felt like a good use of $100. All right, I'm not gonna knock it. It's not the worst scratch off I've seen someone buy. I've seen people buy actual scratch offs, so. Or they increased interest rates and their GDP is in the pooper still. Their inflation is skyrocketing. I think their PPI month over month went from like negative -0.2 to positive 0.5, right? And then their CPI, I think, went from, oh fuck, was it? That had a big move too. I think it was like 0.7. Can I find it? Yeah, it went from 0.2 to 3, 0.3 to 0.7 over the last 3 months. Remember that because they import so much, they're like, if their currency is weak, their rate of inflation can just skyrocket super fast. Very very little they can do without a positive interest rate to rein that in. So their best bet to address their inflation is to increase the value of their currency. And if they increase the value of their currency, a lot of their businesses are multinationals, right? Um, so that could benefit them a bit when dealing with exchange rate against the dollar. So it may actually be like it may be performative for their GDP rather than a negative like it would be for the US. Although the US is more and more becoming import reliant, our balance of trade is still more in line than theirs. Because their currency is worthless. It sounds like they'll kick the can for 3 more months because they need my puts to expire. Does Japan rate hike tank the USD JPY, or do you think it's been priced in by now? I doubt it's been priced in. I think it started to get priced in a little bit, and then they stopped towards the end of this week when the Fed speakers started kind of pulling back what JPOW said last week, which I thought they would do. I think the Fed's whole dovish thing is kind of bullshit. I don't really think they're that dovish at all. I think they just need people to fucking buy maturity so that they can reduce money supply a little bit. But far from the USD JPY is far from a level where it would be considered, healthy. Is Beyond going to have the bed bath put into it, or is it going to be an upstart? One of the things I haven't really paid attention to on Beyond is their like actual valuation. I don't think I care, but their total liabilities are obviously shit. They have a lot of debt. Cash flows aren't great. They're losing money. I mean, all the reasons to short them are there, right? Their margins are having a hard time. Total revenue's been declining a bit. I don't think they're ready to go out of business just yet, but it doesn't look good. So I don't necessarily disagree with the shorts. There's just too many of them, right? Like they over leverage themselves. How high do they have to raise their rates? Yeah, it doesn't take a lot of rate increases to damage the carry trade, because of how much it's leveraged. It's very very heavily leveraged. So even small changes can drastically impact the collateral there. How would they increase their GDP? It sounds like they'll kick the can for 3 more. So what happened when no one believes the Fed anymore? Do they already? I mean, this is at least them turning no one believing them into something positive, right? I mean, broadly, the market has accepted that right now, the market has accepted that the Fed has accepted defeat, right? The JPOW's just giving up. He's not going to do his job, whatever. So Beyond is the next GME? No. Unfortunately not. But I don't think the financial condition of the company matters. I don't really have any intention of owning it. They make like greasy bean burgers. It's fucking disgusting. In unsanitary conditions, and their CEO bites people's ears off. I don't know if he's really pulling a fast one, but he could be. I wrote a thing about it. It'd be interesting. It's a strategy, right? If you can't push Yellen to sell duration, and allow financial conditions to tighten naturally because she's politically motivated. Maybe you just kind of infer that you're going to lower rates and then never do it. And then everyone thinks the top is in. They start buying the duration on bonds. And then you just never cut rates. It's like, that's still a good, I don't know, kind of, there might be some inflation still there. I guess we'll just leave it the same. Right? And they just keep doing that. And the beauty of that is they could do that for the rest of this year. Why is she not selling duration? Because she's a bitch. No, it's for funding purposes and because it's easier to move short duration. There's more liquidity there. If she starts moving long duration, she's going to tighten financial conditions, which she doesn't want to do because it's an election year. And unlike JPOW, you know, she actually has to answer to the president. Is biting someone's ear off vegan? I don't know. I think that would be great for the customer base. Beyond's new CEO is going to do a share offering and then use that money to YOLO into stocks, just like Ryan Cohen. Well, that's always a possibility. Anytime you have an overshort stock with a lot of debt, there's a very good chance that a share offering could happen at any time. So, yeah, something to be aware of. What's the bottom? Mustard? Dijon? Sure. Yeah. Could do Dijon. Could be like a spicy brown. Have you watched Two Puts, One Cup? No. Vegan implies no harming of animals. Cheese is okay. I don't think it is. But it's an interesting take. Okay, anyway, let's. Where do we want to start? Do we want to start? We want to do blue chips first? We want to do. You guys want to do the memes first? We're gonna wrap it up by saying bearish things and talking about the SPX. You already know that. So, which is ironic given how bullish the SPX currently appears to be. Boeing. Boeing's up like 35% after their data breach. Just keeps going up. People think they're going to reinstate their dividend. Actually parabolic. Which is interesting because, you know, orders not much better. Durable goods have suffered. Probably a really good short at some point, just not now. $50 from its low? Jesus Christ. Did they FTD crossover day? No. Actually, tomorrow's crossover day T plus 13. Gold. So gold has been kind of holding up. Obviously setting a higher low was a big deal. There's still currency fears, but I think unless those are realized, gold's probably going to stay between like 1950 and 2050. But central banks are coming in and supporting a lot where retail is exiting. So that would imply that central bank currency fears are still very elevated. Can you comment on the short position on 1-800-Flowers? I don't know anything about it. Do people buy people flowers? There's a short position on it? Is it big? Big Milk is watching the stream. Careful what you say, guys. It's true, yeah. We don't want to lose them as a sponsor this early. Thoughts on SoFi and ARMS? Oh, God. You guys, why are you asking about cringy shit stocks? I don't know anything about this. Does it have a lot of short interest? It looks like it's running a little bit, but it also looks like a pile of fucking shit. Earnings are okay, I mean, which isn't surprising because, well, they're beating earnings, but they're not making money. Will they get buried under debt or something? They charge people hundreds of dollars for plants, like a salad, like a $500 red salad. So you'd think their business model would be safe. Liabilities aren't that bad. Although they have increased. So have assets, revenues. They're projected to have positive EPS next year. Might be like an okay value buy. I'd have to dig into it a bit more, but looks like they're kind of clawing their way out of it a bit. It's a slippery slope, but Jesus Christ. What is costing them so much money? Yeah, I don't know about the short squeeze on it, though. I don't know what the short interest is. I don't see any reason for them to back out just yet. Maybe if they start posting better earnings, like substantially better earnings. I personally believe everything is reasonably priced. What was the other one? SoFi? Someone want me to look at SoFi? SoFi kind of still looks like garbage. What happened to their margins? Did they buy another baseball stadium? That doesn't look promising. Super seasonal, big correlation with Mother's Day and Valentine's Day. Yeah, yeah, they do most of their business there, but they also, they also make a lot of money off just, people always dying. And boomers are getting older. They're gonna start dropping like flies, right? So maybe more consistent profitability year over year outside of the seasonal uptick. Question is, are millennials gonna buy them flowers at their funeral? Maybe not. I'm gonna like, but it's at 69, so I'm waiting. All right, let's dig through some of the memes. GME is still pretty liquid. Failed to break higher on Friday. We continue to see slippage in like mid and small caps into this week. After especially IWM got blown out kind of hard. Mid caps pulled back a bit on Friday too. So there's definitely enough liquidity here for them to short. There's still a bunch of baggies holding calls at 15, 16, 17. So it may be hard to fall back down, but if we see any more persistent shorting or a larger drop in indexes, I think it'll probably fall pretty quickly. Um, Upstart's still kind of just pinned. I don't think we're gonna see. I don't think we're gonna see a significant drop on it unless we see a broader drop in like fintech or Russell. So it's probably just hung up here. Gamma Max isn't really moving above the price. So it doesn't have a lot more range to the upside. Couple dollars. But it also may not fall. I think some of that'll depend on how hawkish Fed speakers plan on being over the next couple of weeks. We saw Williams and Bostic come out, and they were saying kind of the opposite of everything J Pow said. Um, and then who was it that spoke at the end of the day? Somebody else spoke at the end of the day, and they were all about rate cuts in March. So I think if the majority of Fed speakers fall on the hawkish side, then we might start to see some more shorts flow back into Upstart. Otherwise, it may just kind of stay here around $40 for a while longer. Good morning. First time catching weekend stream live in a while. What's up, Yaga? Can you please share your thoughts on BT's expectations over the next couple of weeks? I didn't have any for it. It's still kind of holding that trend line that we discussed. I've been short strangling it. Well, covered short strangling it at 20 and 25 for like 30, 45-day intervals. I feel like that way, if it falls, I can pick up some shares. If it rises, I'll get a signed on a few. And I get to double my yield while staying out of the money. But still seems pretty pinned to 2350. I know there's been a lot of insider selling by that one fund, but I don't think that's a very big deal. Obviously it's still undervalued, but there's still issues with China. So although some of China's industrial production ticked up a little bit last week, that was looking good. Retail sales were still down, unemployment's still up. So if their stimulus is going to improve their economic condition, we're gonna still need to see a lot more data that's happening. So we're probably pretty far out from any severe tightening or yeah in commodities, but I don't think there's a reason for anything to go down right now substantially either. The only thing I would be really concerned with here is if the carry trade closes and Oil rockets on a weaker dollar. That could drive coal prices up if oil and nat gas push higher because the dollar is weaker. But that, I would say, that's the only current risk condition that I can really see. I don't think we're getting any big surprises out of China for a while. I'm a bit behind watching 1.25x. Okay. Park City should have broken into the funeral business. I can imagine a lot of black confetti poppers. Party City being sold for celebrating that one person's death. Goolsby was the end of day and won't be a voting member in March. Oh, okay, perfect. The exact person that needs to be commenting. You know what? I think if you're not a voting member of the Fed, you shouldn't be allowed to attend any speaking engagements. Like, fuck you, right? Where did they get off? You know, this is what I think the Fed should do. But they're not part of the decision making process. What do you think of Airbnb right now? Insiders selling broke up recently. Think interest to the downside is picking up, especially if we get a QQQ pullback. I think if fears around Fed rates staying higher increase, then Airbnb may see a pullback. Right now, I probably wouldn't short it. Not yet. It's getting kind of close, but I'd stay away from it for the time being. Pretty far from any kind of confirmation. And insiders have been selling the shit out of it for like a year now. Also, they destroyed the last earnings. Maybe a miss on earnings now that so many municipalities have banned Airbnb or are taking action to combat the number of Airbnb units available in their cities, and then that may have an effect over time. But you probably want to see another earnings report to confirm that. Otherwise, you know, it's in the S&P, so if the S&P does a pullback, it might, but I don't see any reason for the underlying to right now. I'm hovering at the 98-100 level. Is this a good position? Good point to enter a long-term position. I think the next support is 92 or so. Oil's kind of risky right now. It could swing either way, right? Dollar value. So yields could move back higher and dollar could go up. And then I think we'll see oil go down. Or dollar drops. Yields continue to drop, and I think that we'll see oil spike. So 50-50 on if it's worth it to enter ZOM. Maybe wait for some confirmation or wait till after the BOJ decision. I think it'll be very challenging for China to stimulate things. Carry trade is the one that I'm kind of worried on since I'm playing long Fixie as well. Thanks for your thoughts. Yeah, no problem. Even though China's economy is slowing, remember India, also very coal reliant, maybe even more so than China, is picking up pace. So there are still there's still like an increase in global demand for coal. And that might become even more apparent as Western countries start to attempt to dig themselves out of recession as well, right? So, you know, I know Germany has already discussed converting some power plants back to coal. I mean, remember, coal's a great driver of, you know, industrial and manufacturing capacity because it's cheap and it's easy to get going and plentiful, right? So it's always a good choice when you want to ramp up economies. Are you holding any QQQ puts? I have some TQQQ puts. But no, I don't have any QQQ puts. I'm actually pretty light on the put side of my portfolio right now. I have Vega exposure, which I've been rolling out to June slowly, as vol gets shorted over the last week. Just in order to maintain that, 90-day window that I want. But I'm trying to keep from getting too overexposed to any one direction right now. So most of my positioning's fairly neutral. I have a lot of like lopsided condors and butterflies out that are shorter term. I don't think the market has like a lot of upside left in it, but that doesn't mean it's going to realize the downside. And so I've been kind of positioning that way, and that we're largely going to stay range bound, with intermittent periods of price improvement. Um, Obviously, like the Bank of Japan decision next week could change that. All of the charm falling off from this week could shift momentum a little bit, and we'll see how much. PCE next week could present some potential to disrupt it, although I don't think it will. Actually, something I'm very interested in is CPI in Jan. I think CPI in Jan, they're going to rebalance that weighting component from healthcare, that's helped drive down month over month inflation so much. And I think if Bank of Japan moves forward with a positive rate and we see a substantial weakening in the dollar, and then the healthcare base effect resets year over year, we're going to see a spike in healthcare as a part of inflation. The asset bubble's increasing, so we're probably going to see home prices and rental prices rise again. And if oil's additionally up due to a weaker dollar, then we'll have inflation there. And so I think Jan or Feb inflation prints could be really interesting, and we can see a clawback of that dot plot and a shift to a more bearish or hawkish stance from the Fed. So I think for like 3 months, the Fed's got a little window here where they can say super dovish shit and get away with it and get everybody to pile in to long duration treasuries, and then I think about 3 months into 2024, give or take, that inflation will reignite. The Fed will shift hawkish again, promising potentially more rate increases. And then when financial conditions tighten, they're really going to tighten, right? Because everybody got out of their treasury shorts, everybody got into duration. And then they really have the potential to restrict financial conditions a lot more if that happens. Thanks, Crunchy Pie. What do you think about reducing interest rates, allowing for more housing supply, and unironically causing price to drop? I don't know if you're going to encourage a lot more building than is already going on by reducing interest rates, but if they were to subsidize home building, that could have a big impact. Unfortunately, we're busy subsidizing wars right now. But someday we might subsidize housing like we did in the 50s and 70s. With lower interest rates, people who bought over the last few years may be more open to selling. True. Yeah, it might free up some inventory, but probably not a lot, because I don't think we're going to get interest rates that low. Don't forget, if the carry trade ends, there's gonna be nowhere for banks to seek that lower interest rates or lend against, right? And mortgage rates are gonna go up substantially. Mortgage rates as they stand right now should already be significantly higher than they are. So you would need a dramatic reduction in the Fed rate, and you would need the carry trade to continue to persist. I think I actually got offered a rate at like 6.15 last week, which I was surprised by. I mean, the rate at which financial conditions are softening right now is insane. Were you expecting any kind of correction off this parabolic 7-week rise, or flat up into Jan? Well, that's the question. I mean, right now, a lot of the supporting flows have broken down, and so we're going to be looking to see if they come back in, or if the market's going to need to pull back to allow that repositioning to occur. Based on Friday alone, I would say that they're getting ready to support this level, right, without allowing any substantial pullback. But we do have more coming in. We do have more we do have more realization of the market makers hedge breaking down on Monday, and so we may see a pullback this week. It's definitely possible. We should. I mean, we lost 72 billion in charm over the two expirations on Friday. Historically, that's always led to a pretty significant pullback. And this is historically like triple the amount of charm we normally see. So, but there are other things like, there's a lot of puts. All the puts are out of the money. Most of the calls are still in the money, which is, kind of sets up a weird dynamic. The market maker's still buying the dip, effectively, but like Gamma Neutral's now moved up like $100 since Friday. So Gamma Neutral is much closer to spot than it was. Delta Neutral's moved up really substantially. And falling below those levels means that we can see that the market maker won't be buying that dip anymore. And if we lose that dip buying on the market maker side, the market can start to correct very quickly, right? They're gonna buy so many zero DTEs. Probably. Yeah. They do like to buy zero DTEs. Who doesn't? Let's be honest. Like, we give them a lot of shit for buying zero DTEs, but we buy them too. Maybe they should make a rule with zero DTEs where, like, if you have a net worth or assets under management in excess of like 2 billion, you're not allowed to buy them. All right, where was I? Top still hasn't seen any significant covering. It's been being shorted. This one I'm actually kind of interested in. I want to see how it handles Opex. A lot of puts fell off on Friday, so especially the $2 puts. That might open up some potential for price improvement here. The $2 puts have mostly kept price under $2. But it is picking up volatility. It has picked up some call interest, and with the puts falling off, that may kind of shift that market maker neutral a little higher and open up that possibility to break through the hedge. And if the hedge flips, it can run. Although I still don't think that'll happen unless someone's actively covering the underlying. Beyond, I think I already wrote about this on Friday, so if you guys want to know more about Beyond, check out my Twitter. Apple rejected off of its all-time high and starting to fail. So I've been trying to sneak in out of the money credit spreads on this, bear spreads. So far, I have a lot of them that are all in the money, but I'm hoping that the price continues down. A bunch of Delta fell off here. A lot of the bot calls fell off on Friday. It's been trending down for a few days anyway. So I think the momentum of the call interest is starting to shift. If it continues to shift, Apple will start coming down. I don't know how far it'll come down. Right now, my target's like 181, maybe, and that's kind of, yeah. I don't think I'd target anything further than that. But like 190, 187, and 181 to the downside. Um, but it is starting to look good for that. Amazon, still kind of don't want to fuck with it. Not only is it still arguably a little more undervalued than the rest of the Mag 7, but call interest has been kind of improving here. I think this may be setting up to be like the next big Mag 7 pump target. I've thought that for a couple of weeks though, and nothing's really happened on it. So maybe I'm wrong. But yeah, call interest has been pretty steadily increasing on the buy side for the last like 5 days. Delta's been picking up. Charm on it's still positive after the expiration. So I think this may be ready for at least a small move higher. But Gamma Max is at 155, so probably not a ton of range if it does. The NIMBYs won't allow new housing or anything that would perceive to reduce the value of their investment properties. Mm. Yeah, I suppose it's a problem. NIMBYs. Is that like the not in my backyard or whatever? I'm kind of unfamiliar with the term. I feel like I've seen it somewhere, but anyway. AMD is still butting up like right against Gamma Max. I think that started to turn a little bit higher into the end of last week, which maybe a slightly bearish sign. It did end up closing Friday below Gamma Max after a period of 3-4 days above it. Delta's been falling off. Bought call interest has started to fall off. So a pullback here to like 128 looks pretty good. And I know that seems like a lot of range, but especially with the call interest breaking down and really not seeing any more supportive interest in like the 130 to 135 range. I think it can accelerate down pretty quickly. Let me check one other thing here on this. So yeah, a little bit of support at like 35. But below that, I think Gamma starts to flatten out quite a bit. And the shorter expirations here really have a lot less support. So I think we're seeing like the 145, 150 strikes being sold a little more heavily. So yeah, AMD looks like it could be poised to begin a pullback. It might be very slow though, so be careful with it. Meta, I don't think Meta's still just kind of looks distributive, and it's still moving to the upside. I would want to see a break of 311 for anything really bearish there. Actually, Microsoft, despite all the pumping last week, has actually been underperforming a little bit. It's down 39 basis points over the last month. I think we've seen a pretty substantial amount of the call interest on it fall off. 1 second. I know a little bit came back in on Friday, but not very much. Dealer delta is still negative. Yeah, this is either gonna find some support tomorrow, and we're gonna see continued call buying pick up on it, or I think it's gonna start to reject and fail even lower. And that would probably be looking at the 360 to 350 range, I guess. Yeah. So I'd be looking at a pullback to 360, 350. From 350 on, maybe it gets a little bit worse, but delta neutral here is at around 340, so there's quite a bit of room to the downside. And then what was left? Netflix. Maybe if it falls below 462 again, I'd be interested. Nvidia, I feel like should be topping out. Although it managed to bounce back from its failure last week, where it started to lose. Oh Jesus! It started to lose this upside range last week, and then a lot of the sold calls were pulled back. They started selling calls at around 500 again up here, 500 and 490 into the end of the day. Probably wouldn't want to go short on it, so you could confirm a breakdown of 81, but that might be a good entry opportunity as it moves to retest that 76 level. And then Tesla, I wouldn't fuck with it right now. Volatility's picked up there a little bit as it's reached the end of this consolidation, but I don't really think any direction has been picked here. Above 240, you probably want to be long, but rejections at the 253 level seem to be pretty consistent. If this pulled back below 245, I might consider trying to go short, targeting 235, 230 again. So maybe that's kind of the long short flip point right there. Gamma max for Nvidia? I do, yeah. Give me a second. Uh, 510.83. You're looking to sell theta, or are you trying to buy calls for gamma max? All right, so that's about it, and then it's almost exactly 1:30 now. So let's hop over to the quad chat and see what the nerds are up to. What's up, guys?
This is what
hey,
our government's
what's up?
and I was like, I am so
Can you guys hear me? What the fuck?
What's up?
Oh, no, you can hear me. All right. My mic, it didn't look like my mic was picking up on Discord. I'm doing all right. How are you guys?
Oh, I'm doing all right. Yeah, we're just talking about what we're doing with our money lately.
No, anything fun?
Yeah, we're both actually 100% yellowed into next weekly Beyond calls.
Oh, Jesus Christ.
It cannot go tits up. That's what J Pal said at the last meeting.
Did he do it? Did he do it while biting into a double Beyond cheeseburger?
No.
No.
I'm pretty sure we've
we've
talked about this before. Have you guys had Beyond Burgers, Beyond Meat?
No.
I've had one.
It's kind of gross. I mean, it's just yeah, it's just not quite there. I feel like this whole thing was already solved. If you don't want to eat meat, but you want like a hamburgery type thing, just get a black bean burger or something. Like, stop trying to make it
like compared to a black bean burger. I mean, it's got like it's just ever so slightly juicy. So like if you're like an actual vegan, like it's like amazing.
You've got to get Dr. Prager's veggie burgers and deep fry them. They're just like a veggie croquette.
Yeah. Yeah, I mean, there's all sorts of options.
Here's what I don't get. If you're a vegan or a vegetarian, why the fuck do you want something that tastes like a burger?
Because burgers are fucking delicious, and they'll be the first to admit
it. It just doesn't it seems so counterintuitive.
Well, so here's the thing, Girk, is and this is my long-term view on the whole, plant-based meat thing, is it's infinitely more sustainable than actual fucking meat.
Yeah, but it tastes like shit.
No, if they can make it taste good, then that's like the final hurdle, is if you can make it indistinguishable from real meat, then you win.
So we just need Matrix, Matrix style chambers that we can keep like cows in.
But
they're not like real cows.
No, what we do is we put the cows in these like little cells, and then we just extract stem cells from them, and then 3D print our meat. So you get like a 3D printed tri-tip.
I feel like
I'm gonna have an unpopular opinion here. Instead of trying to eat fewer cows, I think we should just have fewer people.
That's also a thing. Yeah.
Well, we're working on that. We've largely, as a culture, like societally, we've stopped breeding a lot.
Well, ever since 2008, 2008 was the big kick towards depopulation.
We don't need them for anything, right? I mean, people have babies to
think of how much our productivity can go up.
Yeah.
I mean, we do need babies, because who's going to wipe our ass when we're shitting ourselves? And
we need some
chat
but
GPT?
We don't.
Ass wipe GPT?
Yeah.
All right, I'm down. But yeah, the robot Musk just showed, which is has pretty good dexterity in its hands. That thing will wipe your ass.
I mean,
with a Tommy gun.
There's probably that Tommy gun was obviously fake, completely fake, CGI. But the robot I just saw, I'm pretty sure that's sped up. And that's the thing, you can't tell. Like, Google basically faked their Gemini or whatever debut. Completely faked. There was a lot of accusations over the years, actually, as Tesla has entered the foray of robotics and machine learning, that a lot of their stuff has been faked. Jensen just rambles actual nonsense, and is probably faking some of his financials. There's so much fraud. Like, just on the nose, the deceit is very telling, I think. Like, the fact that it's so easy to tell how much everything is being faked. I don't understand how more people aren't like, okay, we need to take a step back here and stop listening to the rhetoric and start looking at what actually is there.
Well, I mean, we need a Theranos moment for AI, right? Like, that's the thing, is investors are willing to be they're willing to be defrauded as long as numbers go up and they don't go bankrupt, right? Like, for Theranos, even while there were rumors circulating that they actually were outsourcing their blood testing and doing all this shady ass shit, their stock was still going up.
Yeah. See, that's the thing. Well, think about it. Remember when we all hedged Nvidia earnings?
Yeah.
Because we're he'll never beat this, but maybe he will. And then they beat, and the stock went up $100. And did we care that it was fraud, that our 5-cent calls printed and went in the money, and went up 15,000%? No, we didn't.
Yeah, that's the market. Like, yeah, you're kind of you're like you're asking a lot of the market to tell it to stop caring about profiting off of the emotional reaction to literally nothing. That's a big ask.
Yeah.
Probably thinking, look at the accounts receivables, over 8 billion, 3 to 8 billion.
I'm trying to avoid being labeled a tinfoil conspiracy theorist, so I'm hedging my words. I think that there's
Why?
a reasonable amount. I don't know.
You're
Twitter
tinfoily as
famous.
fuck. Oh Jesus.
I know I am. I mean, I think I will die. I will die on the hill that Brian Moynihan is a lizard person.
Okay, as long as you can agree with that.
I don't think he's a lizard person. I think he's a tiny little alien controlling a humanoid body.
I keep asking Claudia Som versus via DMs and publicly how we're not in a period of stagflation, how she would define stagflation, and are we going to, if we're not in stagflation, are we going to enter a period of stagflation when the effects of fiscal impulse wear off? No response. I'm feeling like she really, yeah, I know she did. I'm feeling like she really doesn't care about edifying the general public.
Nobody does.
I mean,
but she did post pictures of her Christmas tree today.
That's cool. I mean, before I'll never see them because I was blocked.
Yeah, you're blocked.
No, before, I mean, she's just really pissy to like everybody on. She's like trying to throw shade on everyone, being like, "You're all wrong. Everything's great." And if you go and look at like her profile, the top pinned post is her explaining in probably more than 20,000 words how the SOM rule is just a moving average of unemployment. And I was like, okay, we get it. You're waiting for a moving average of unemployment to go up 0.5%. Like, you get that. But I just said that in one sentence.
You've been around a lot of academics, right? Like, there's always that one guy who did one thing, and he's just like, everything he talks about, it revolves around his one successful thesis, right?
Yeah.
I think that might be Claudia Som.
My approach to academia and science is just to have a lot of hypotheses, and then you just start burning through them, which I think is the whole point of science. Actually,
I think that's the most fun way to approach. Like, why would you ever want to stop experimenting?
Yeah.
Who signed up for science classes to do the classwork and not the labs?
Well, there's nothing more exciting in science than finding out that your hypothesis, after you tested it, was wrong, and you have to refine your model.
Exactly. Right? Yeah. Right. No. So I remember there was a point where I just thought it was really cool. The I forget what the system is called. You can look this up. Somebody can look it up while I'm explaining it. But it's the thing that measures the telescope that measures gravity waves.
Okay.
LIGO.
Huh? LIGO. That's it. Yeah. So basically, the way it works is, there's this idea from Einstein's theories that because of the nature of gravity and the movement of celestial bodies and things, if you have a very large event like two black holes colliding or two suns colliding or something like that, just like dropping a stone in the water, you will create a ringing in gravity, and that will ring out through the universe. And so you should be able to measure this ringing. And so they built this system where basically it's just LIGO. It's just a really long tunnel, like made out of cement, just in the middle of nowhere. And on the back end is a really finely polished mirror, and on the front end is a laser. And they just measure the time it takes for the laser to go down the tunnel to bounce back. And so very tiny changes in the distance between the laser and that mirror can be measured. and very fast, with very fast resolution. And they built two of them. They built one in like the Pacific Northwest and one in like Louisiana or some shit, just so they could, you can back out. You can subtract the signal from the two to make sure it's not noise.
What you
that
can
you're
do also
measuring.
with that is triangulation too.
Yeah, a little bit of that. So they actually have two paths. There's one that goes one way and one that goes perpendicular, and so they can measure the contraction and expansion at the same time in one direction or the other. So, anyways, really cool. And I remember like when they brought it online and they actually measured one. I don't know how many more they've measured. You'd think they would have seen a lot given how quickly they saw one. And I remember a lot of my students and things at the time. We just chat in classes about topical science things, and they were all like, "Yeah, this is really cool. Do you think it's cool?" I'm like, "No, it's super boring." Like, to go through all of that work just to confirm that the existing theory is right. Like, oh my god, what a waste of time. You learned nothing new. I mean, it's cool that you verified the edges of this theory, but
Well, so I think the coolest thing about it was that they refined the they refined the Michelson interferometer to like the nth degree. Like you're measuring contractions in space that are like so fine. Like
yeah,
it's the
like
most
like like
precise measurement
the
ever.
part in me, the piece of me that loves big explosions, just because they're big explosions, loves like how cool it is that they built that. But the fact that like all it did was confirm existing theories was a real big letdown for me.
I
I was
mean,
hoping
well,
some really weird shit would come out of it.
that'll be yeah, that was kind of what everyone's hoping for. It's all with like the Hadron Collider is like all they're looking for is something to prove the existing theories wrong, right? Because if they get that, then that
Yeah,
points to the existence of new physics, which is the most exciting thing ever when you get that.
yeah. When they found the God particle at the Hadron Collider, ugh, awful. Like,
Yeah, the Higgs boson. Yeah, that thing was. Yeah, I
great,
don't know. But
you found the thing that you thought should be there, which means we've learned nothing new.
so one thing we could do that would be really exciting is to actually test the curvature of space-time because right now all we have is like
Tom Hanks
theoretical
found
models.
antimatter in the Hadron Collider, by the way. So
Yeah,
they made a
yeah,
movie
we did
about
Wait,
find
that.
antiprotons.
And then the
Tom
Pope,
Hanks? Wait, what?
yeah, and then the Pope blew himself up in a helicopter. He was Obi-Wan Kenobi.
I did not see this movie.
Oh
What are you
wow,
talking about?
I forgot the name of it. It's a real movie though.
What?
Yeah. It was one of those like religious mystery movies.
Oh, it was like
Damn.
the Left Behind
Da
movie.
Vinci Code. It was Angels and Demons. That's what it was.
Oh, that
Angels
movie
and Demons.
stupid.
Okay,
Yeah.
because that was the guy who wrote the Da
Yeah,
Vinci Code.
yeah. So
Okay.
basically, Tom
Dan
Hanks,
Brown or
like
something
somebody
like that.
steals antimatter from the Hadron Collider, and then
They
smuggles it
steal
into the
it?
Vatican. Yeah, and they smuggle it into the Vatican, like some
What is this, like sitting in a
sect.
vial?
It's like a sect. It's like a former religious sect, and Opus Dei. And they come in and they put so they've got a vial of antimatter and they hide it in the Vatican, and then the Pope dies and Obi-Wan Kenobi becomes the Pope, but he's like 20 something, so he's like a cool Pope. And then he gets in a helicopter with the antimatter and blows it up over the Vatican, saving everybody. And then like parachutes down, and everyone thinks he's God, but really he's the leader of this other cult that stole the antimatter. Boom, plot twist. Sorry I ruined that for everybody.
I'm gonna be honest. I was never gonna watch it.
Yes, you were. You're looking for it right now.
It was like a person who said, "Okay, we're going to use antimatter as the plot, and I am not going to look into the properties of antimatter at all."
Or the fact that anything that comes out of the Large Hadron Collider exists for like 1/quintillionth of a second and then just decays into something else.
Nothing. Yeah.
Yeah,
It's
you're
what we.
not just like you're just like stopping the Hadron Collider and like pouring shit into a vial.
Yeah, no, like the hadrons that exist in the collider, like they're part of pairs that just instantly recombine. Like they don't exist for very long at all. Like the Higgs boson exists for like as its own thing.
I
But, like,
hate
the other
writers.
yeah.
Maybe AI is the solution. I mean, AI couldn't do any worse than actual writers.
You know, I think it'd be cool if they could somehow use AI to help make their stuff a little more scientifically plausible. You know, it doesn't have to be perfect. We could suspend our disbelief a little bit, but like, you know, I was watching 24. Have you guys ever seen the series 24?
Some
No.
of it.
It's so like the cryptography lingo they throw down in that show is so bad.
I think I've
It's
seen
against
like one
phenomenal.
episode of it, and it was just bad. So I stopped watching it.
It's pretty terrible. But I like Kiefer Sutherland. I'd bang him.
Okay.
Mm.
It's just
All right,
purely.
have we lost everybody yet?
No, we have more viewers.
How does this happen?
Actually, the rate of viewership is I'm gonna send you a screenshot. It's increasing exponentially. I just dropped it in chat. It's just going straight up. It's parabolic.
Jesus Christ.
Yep.
Oh my god, they love us. They
You know
really
what? You
love
know
us.
what's actually crazy? If we spent more time talking about movies, your hot tub, and listening to Dork fetishize Kiefer Sutherland, we'd probably have a way larger audience than if we talked about stocks. I think it's when we start talking about stocks that it drops off.
Oh my god.
I mean, that could be true, but I mean, we're also doing the best that we can to make a general discussion about macroeconomics and equities and such
Bearable?
somewhat, yeah, bearable. Yeah, it's pretty dry shit.
It is. It really is.
I
So
guess
we're
we should
gonna
talk about
talk.
stocks
We're gonna
once
talk
viewers
about
go.
Yuta going Godzilla on the U.S. dollar this week.
Think he's gonna?
I don't know, man. Their inflation's kind of fucked.
Yeah. What were the? Sorry, I almost dropped my water all over my computer. What were the latest numbers? I remember like a month ago, their GDP was like in the toilet, but their inflation was still hot, which was super scary. Is that
Yeah, so
continuing?
their GDP is still garbage, and their inflation is starting to skyrocket. So over the
Oh,
last 3 months, CPI has moved from 0.2 to 7 month over month.
0.2 to 0.7 or
0.7.
7. Okay.
0.7. They're not. This isn't Venezuela.
That's still wild.
Yeah, it is. That's CPI, and then PPI has moved from negative 0.2 to 0.5.
Holy cow.
Okay. Okay.
So we got a little bit. We got a little bit of strengthening in yen, with JPOW being a big cuck last week, right?
Oh my god.
But that strengthening in yen started to fade Friday as other Fed members came out and they were like, "Yeah, we're not doing that." So I mean, I don't know. I don't know if Yuta's going to feel confident enough that the U.S. is going to start cutting rates that he's willing to gamble his currency on our decision anymore. And I think that's a decision they made already. I think that's a decision
Well, yeah, I mean,
been making
like,
for a while, and I think they've already decided, frankly.
yeah, so like put yourself in the shoes of Ueda, right? Like you're literally staring down the barrel of a stagflationary recession, and like your choices are
Japan's been in a
one.
stagflationary recession for 30 years.
I know, but like it's actually about to start like really kind of kicking off, right? Especially with like the carry leaned on so hard the past year, like the fiscal impulse from America on the rest of the like global financial markets and the ECB
Yeah.
has been like, that's the thing that's like really kicking it off for Japan, especially as the rest of the world has been squashing their currency, taking advantage of the interest rate arbitrage, right? So as you wait, you're sitting here like this is actually the inflection point, where either we get like super bad inflation because our import prices are going to go through the roof, or I just have to like rip the Band-Aid off and just destroy my own economy. It's what we faced in the 80s, right?
Well,
What I find really
on the
weird in
Japanese side,
general.
and Sisyphus is right. There's been mounting political pressure on Kishida, because it's you've got like 50% of stay-at-home moms in Japan like actively trading forex every day in order to like make ends meet in their households, right? That's that's not the sign of a robust and healthy economy.
That sounds like Weimar, Germany.
Yeah, right.
The thing to me, in general, just about all of these discussions about interest rates and and the health of the economy and inflation, if to me, just from somebody from the outside who doesn't have a presupposed model in mind and who's just looking at the data, I would make the following claim: low central bank rates brings about recession and stagflation. High central bank rates bring about inflation and a hot economy.
I think you can't really like boil down rates to a single domestic central bank anymore. I mean,
Yeah, no,
that's
I
how
understand that,
rates
but just in
operate.
general, I mean, this idea that higher rates slow things down and lower rates speed things up. If you just actually look at the correlations, the opposite appears to be true pretty much everywhere.
Well, no, that's you're looking at the reaction function essentially at that point. Like, so when inflation picks up, rates rise, right? It's because these are decisions made by people. You can't like draw correlation. Like, then you're just trying to correlate psychology, right? So a better way to look at it would be to sort of almost create like a yield curve, but it's like a bowl shape, and it's the global like central banks, like all the big ones, the ECB, Bank of Japan, USA, um, and South America, and sort of determine where like the arbitrage flow happens, right? And then from there you can sort of tell which way the money's going to flow, right? Like out of one country into another. And then you will start to get that. So like yeah, high interest rates in America, but low interest rates somewhere else, definitely inflationary for America. And the reason why is because you're able to keep credit conditions looser than normal, right? Like if America was a bubble and we raised interest rates and there was no arbitrage anywhere, yeah, we would have seen an economic downturn almost immediately. But because, Bank of Japan has its own crazy thing going on, and like Turkey also had its own crazy thing going on, we were able to crush their currencies, one more so than the other, but systematically crush their currencies as we made sure to keep lending volumes high. Like right now, like, and I said this a few times before, but like even right now, like our mortgage rates like are pretty freaking good for how high our federal funds rate is. Like
Yeah, they're
if there
insanely
was no
good.
arbitrage, it'd be so much higher,
Yeah, that's the thing. If the carry trade closes, right, and that's kind of I know you were reticent to post my tinfoil speculation on Twitter, JFresh.
I posted it, didn't I?
You did. But did you read it or did you just post it?
I don't read anything you write. It's
That's
awful.
such a
No, I read
liar.
it. I read it.
Okay, yeah.
I read it.
So the reason I think the Fed has the opportunity to do that is they do have a bit of softening in inflation right now. And Yellen has created conditions for them in which they cannot meaningfully tighten financial conditions with rate increases, right? But if they allow the markets to believe that they're done hiking, right? If they conclude their rate increase cycle, the market's gonna assume the top. We're gonna see the flight to safety trade. Everyone's gonna
Yeah.
start moving into duration, and
You mean Nvidia?
yeah, Nvidia and duration. Well, we are seeing a move into duration, right? We've seen
Yeah, no,
yields,
we are.
yeah, and then just do nothing, right? And then and keep conditions as tight as they are, and that forces the market to double back and retighten. Except now they're tightening from a point where the carry trade is collapsed. There's no more arbitrage on that side. You're tightening, your financial conditions are tightening from a point where everybody's now bought into duration, and yields are moving above where they bought in, right? And you actually get a period of tighter financial conditions for like 6 months to a year. Also, and if he really does it right, he can force Yellen to shift her selling into long duration.
Yeah, we were talking. Dork and I were talking about this a little bit before we popped on here. Yeah, I mean, I kind of agree with everything you just said. I do think that the carry trade is mostly tapped out, and that's why everybody's waiting to see. A lot of people think that Japan's gonna kick the can down the road for potentially for political reasons, just to say they have a little bit more time before they have to do something. Obviously, you disagree with that. I think everybody can manage that timing risk there, that unknown. But obviously, it seems like the carry trade is mostly tapped out, so that lever is no longer available. And
well, the risk is too high, right? Like because Bank of Japan's waffling, you can't lever it up. There've been a couple days where they have too. There've been a few days where we pumped real hard and they fucking pushed the carry trade in a big way, right? But like outside of those couple of days, it's steadily being drawn back. And I mean, you just can't risk it now. It's the risk is way too high to throw trillions of more dollars into it.
But the Yellen and J Powell fight, which right now they are definitely at have opposing goals here. They're at odds with each other, and I would love to be a fly on the wall in their discussions. But I think we were just looking this week to see if there was anything interesting coming up, and of course we saw the 20-year bond and got excited and went to go look, and it's like $13 fucking billion or something like that.
Yeah.
Meanwhile, she's issuing like $200 billion in bills with less than a year of duration, and so what she's doing is she's juicing the front end, and that's drawing down RRP, and that's also allowing, giving the long end breathing room, which set off a short squeeze, which I think is getting close to concluding, which is why I sold a bunch of my duration last week.
Yeah, I think you'll probably get
I
think you'll get an opportunity to get it back at a better rate anyway.
Yeah, well, so here's how I think it's going to play out is as RRP gets close to ending, it's going to be right around the time when buy the fucking dip is going to expire, or sorry, buy the fucking paper,
the
BTFP, in March, and JPAL's probably going to have to renew it. But what's going to happen is, if Yellen continues to try to push on the short end and the Fed is unwilling to raise rates or looking to lower rates, the short end rate might actually lift off of the FFR, which would essentially just pants JPAL like on live television in front of the world.
Yep.
To show that he is completely emasculated and neutered. So JPAL can't let that happen. And so I think what's likely going to happen by that point, I think he's going to have to potentially raise rates for that reason, which will collapse the long end of the curve again and swamp everybody. And so, I agree with you. I think that the long end the rates are going to go way back up for that reason.
I think when it happens, they're going to go up fast too.
Yeah, just because J Powell cannot let the short end lift off of his curve. He must continue to convince people that he's doing something. even though I think right now people have the least amount of confidence that he's doing anything at all or knows what he's doing. I mean, people are just ignoring the Fed at this point.
Yeah, I mean, look at the last FOMC meeting, right? Like going into it, there was an expectation for 4.5 cuts in 2024. The Fed's like, we're gonna do 2.5 cuts. Federal fund futures same day, prices in 6 cuts. I mean,
Yeah.
it's almost embarrassing. Mr. Madman, was there something happened around 12:48 Friday to start the drop? Yeah, Bostic said that he saw 2.25% interest rate cuts in 24, assuming the progress on inflation were to continue. But he didn't see room for a cut in March. So he still thinks cuts are going to be on the back end of the year.
Yeah. Yeah. So I think, and one of the things that I'm really looking for as this plays out is that we're gonna hit a point, I think, where issuance, we've all been, I think the acceleration of spending from the fiscal side has largely stimulated the economy through increases in velocity, or the acceleration of the velocity of money, because ultimately in the long term, fiscal spending should raise bond rates, not necessarily raise inflation or economic activity.
Yeah.
Because it goes in on one side, it comes right back out into the bonds on the other. And so I think that as that effect plays out and it starts to get sucked up by bonds on the long end, the JPOW is going to have to make a decision of whether he's going to allow those yields to rise, which will actually cause significant tightening and perhaps put a lot of political pressure on the White House and Congress to get their shit together. Or is he going to buy some of that to alleviate those rates? And if he starts buying, you start risking on as hard as you can, because we're going to inflate and you want to own things that have
Exposure to
defense against inflation, like monopolies, like the meme 7.
Yeah.
So yeah, I mean, if he starts buying bonds again, I'm buying every monopoly I can get my hands on.
I mean, the craziest thing here is that, like, and you brought it up with the backstop, and I think that's where the linchpin on Fed policy is going to fall this year. He really isn't in a position where he can allow the backstop to continue at a lower rate than it was implemented at last year, right? Without actually, like, we talked in the past how it was financial, like it was quantitative easing, but it wasn't, right? But if he re-extends it, and the rate plus premium is lower than the prior year, then he is effectively quantitatively easing. So he either needs to keep rates flat and close the backstop, or he needs to hike rates and allow it to be open another year. But I don't think the third option is even available. Well, I mean, it is, but yeah, it's like you said, hyperinflation, right?
Well,
Or the first step towards hyperinflation.
You really shouldn't need the bank term funding program so long as unrealized losses aren't out of control and deposits aren't flowing out, right?
They're still flowing out, aren't they? I mean,
no,
it's a trickle now.
Deposits are still flowing out.
Yeah,
right.
They've never stopped.
The BTFP being utilized, right?
Yeah, it is.
Even now,
yeah,
like 8-9 months later, it's still being used. So it's just interesting.
Yeah. And it's still going up, right?
Yeah,
very slowly. I mean, it's the rate at which that thing is moving, that dynamic is moving. It seems unlikely that that's going to be the thing that's going to cause chaos. It's something else is going to happen.
We should also probably consider more broadly on the international stage, like EU and Bank of England and China as well, right? Lagarde was very firm. She's not going anywhere with rates. Bank of England probably needs to raise them again. And nobody really talks about it, but a lot of what Vulker did in the 80s was protect the dollar value, right, during a Cold War. And he did it softly at first, and then he went hard because there was too great a risk that the value of the dollar would fall. And despite everyone buying that the Fed only has two mandates, that part of price stability in relation to dollar valuation is very much a focus for the Fed. It always has been, right? I mean, it's kind of why we have a central bank in the first place. And I think like just dollar valuation slipping creates a huge risk especially where inflation is at now. And I think JPOW has to keep his eyes on that. If China's stimulus if it works out, if Bank of England raises and EU stays flat, the EU has no intention of cutting rates this year at all, right? Like that doesn't leave the US with very many options. And we ideally we want to stay at a higher rate than the rest of the world, because we want all that capital flowing into our treasury market and our currency and our equities, right?
Right, and if the EU, if they keep their rates high, we actually like lower rates below theirs, we are going to see some capital outflows to chase that, sort of arbitrage.
Yeah.
So that would be.
Yeah, I mean, yeah, I think in general, the way that I look at it is the higher our rates are relative to everywhere else, the more we export our inflation, and then the more that other places raise relative to us, the more they export their inflation to back to us.
Yeah,
so
yeah. That's.
I mean, I don't think it's a mystery that our rate's higher than most everyone else, right? Because we are exporting our inflation to everyone. But as they start to push back on that, like the fact that all of these other large entities are trying to resist how long until they have to raise versus us who are trying to like time the cuts, I think is telling that the risk is up, not down. And the problem is that everybody thinks everything is linear, and right now inflation's going down and it's going great. And people just assume that will keep on continuing, and they're ignoring some of the dynamics that could cause that to change.
I feel like they're ignoring the dynamics that started the shift in the first place, right? Like, I mean, the whole drop in CPI, like all of it, and you've looked at the numbers too, as if I was centered around the healthcare change, and the reweighting of healthcare, and like once that now that establishes a new base effect as of January 2023, right? And it goes from we had 2 consecutive years of healthcare cost decline, which it's currently waiting on, which is 2021, 2022. Right, and then that's the change in January is going to mean that 2021 is no longer counted, and 2023 is. And 2023 saw a significant increase in healthcare costs, right? Far in excess of the decline in 2022.
I don't know.
And so that means
idiot, but my insurance is skyrocketing.
Yeah, no, you're not an idiot. You're right. 2024 is expected to see increases of like 5% or something. And so that what is currently deflationary and only has been for 2 months, right? Like the prior metric was inflationary. Then we moved to this new weighting. It's deflationary for now, but as of Jan, it'll become inflationary again. And it'll become inflationary as a larger part of that basket, right? And so the 2 month decline we're seeing in inflation it's not like based on a persistent variable, right? It's gonna change. It's gonna come back, and it's gonna come back hotter. And it seems like everyone's just ignoring what actually caused the drop in inflation. They don't give a shit. It's just like, oh, inflation down, but like the reason
Yeah,
why
and
doesn't seem to matter to anyone.
yeah, there's other pieces of it too that also people are ignoring. I mean, one is energy costs are quite low, maybe even unusually low. I think oil is pretty close to a bottom, and I think it's going to go up.
Well, yeah. So
Um,
if you're right, if China is successful in even a small, even and so far it looks like they're starting to have some success, right?
and it certainly looks like they're willing to do whatever it takes.
Yeah, I mean, well, they have to, right? Because
They are pumping
they've already totally
buckloads of money
fucked their
into this.
GDP to
Yeah,
debt ratio. But they're showing some small progress, right? And if that small progress translates into broader progress, and manufacturing in China really does pick up, the demand for oil is going to skyrocket, right?
yeah.
And
I
you're
think a lot of the current value of oil is speculative, and I think that those shorts are going to get burned to some degree going forward.
yeah.
The other part of CPI, and this is starting to get to be a pretty tired trope, is that CPI measures rents in a lagged way, and so it will come down. If you go and look, like the people have been saying that for a year now, and rents aren't coming down.
No,
I mean,
no.
they've come down. Like the rate of increase has come down, from like 6 or 9% or whatever, but it's still like,
But it tends to be like a lagging indicator of home prices, right? But then every time this asset bubble reinflates, like we saw in June, rent prices go back up, right?
yeah,
So
yeah.
like,
So
so you get this like
and
spike in the asset bubble, and equities and homes go up again, and then lagging that is like a spike in rents, right? And so you get like a double peak, and then this usually pushes up inflation in the interim while home prices decline, and then housing rent prices will start to match up with home prices and decline as well, and then we get like this again, and we get another fucking spike in home prices, and rents are going to just follow suit.
yeah, and I think and all of this is underpinned by wages, right? As long as wages are
Yeah,
going up more than 5% a year, which they still are,
yeah.
uh, they're gonna buy. The demand will always be there, right? The demand is going to grow at 5% a year. People don't save more as they're doing better. They increase their spending to match their increases in wages, and so it's got to go somewhere. And you can call it you can call it inflation, or you can call it productivity, which right now they seem to be pretty happy calling it productivity, but uh, it's going to
I
keep
mean, yeah,
going
but if
up.
that productivity doesn't translate into nominal GDP, then it won't matter, right? Like over time, like if we don't see that productivity translate to improvements in gross domestic product, it's going to be, the productivity value is going to be
GDP's
meaningless.
been great. Did you see the GDP now, most recent one? It's
That's
already like climbing up,
it's like
hitting
doubled
close to
again. Yeah,
3.
yep.
Yeah, yeah. I
Which
think it'll
that's
be
going to be,
another. I think it'll be another 5% quarter. Why not? I mean, we are juicing the fuck out of everything. Why wouldn't it be?
well, I mean, it's going to be until earnings start to come in. That's going to be
Sure.
ugly. Let's get some
I,
questions. I really don't think the collapse of Kishida's government is largely due to yen weakness, and him and Yuta meeting could have been talking about ending negative rates. I mean, they've been discussing ending negative rates for a year now. I think they're, the real question on every economist's mind is, are they going to move forward with it now, and get ahead of
yeah,
the inflation, or are they going to wait till mid 2024? And most economists right now agree that they're going to wait, but
yeah,
the talk, like the chatter out of BOJ and Nikkei, like Nikkei News, which has been their primary source for leaks, has all been, they're going to do it now. They're going to get ahead of the curve, and they're gonna get yen on track now. And the Ministry of Finance has about $185 billion still that they could use to support yen, but they don't want to. They've already backed out of any support of the yen, unless except for extremely volatile situations. And even that, I don't think they want to. They want yen to squeeze. They're the main beneficiary of the carry trade collapsing. All that money flows back into their economy. and bolsters their
Well,
currency.
Yeah, but
well,
they don't want it to they want it to like they want it smooth progression, right?
Well, maybe not. I mean, they can wake up and choose violence. It would be smarter. It would be
Maybe.
better for
Yeah.
Japan in the long run.
Yeah, I mean, I agree
I
that
think it's really just a
most people
question of how
think
much it
they
would
have still
sour
time,
political
but
relations.
yeah.
But maybe not much,
yeah.
right? I
Well,
mean, the U.S. we want tightening. We want our inflation to come down. That's a good way. That's a damn good way to get our fucking force our banks to tighten, and you know
Blame
it would
Japan.
crush China.
Yeah, sounds great. Let's do it.
so Girk, I'm gonna put you on the spot here because I was looking at this measure and it looked interesting. So
Yeah.
above that chart that you posted of the viewership, that looks oddly like the BTFP chart.
Okay. Balance sheet earned
Yeah, the
income.
balance sheet income earned not collected on loans. I was having trouble wrapping my head around what that meant.
Yeah, it looks
This
ominous.
balance sheet income earned not collected on loans.
And this is bank. This is for banks.
Okay. So this is for
Yeah,
GSIBs. This looks like equity increases.
it's FDIC insured commercial banks and savings institutions.
Yeah, so this is banks like wildly speculating in the markets, like they did ahead of the GFC, right?
Okay.
And
That's what it
com.
looks like to me. This is like trade earnings, right? This is aggressive trading by GSIBs.
So like this is like paper
So
gains
this
in a way.
essentially proves that Brian Moynihan is a lizard person.
Yeah. Here,
I knew it.
I'll try to bring it up for everybody so you guys can see this
I
on the chart.
knew it.
Like the numbers aren't really that big, but just
Yeah,
the
I mean,
rate of
like, well,
increase
like first
is
of all, this is
striking.
something that's like largely, if you go further back into the past, I don't know how far this metric goes back, but you should see like the pre Glass Steagall era, where this is going to be like real boring, and then look at like the post Glass Steagall era, right? After Clinton repealed it, and we see that first big spike of you know like equity gains for large banks or investment banks after Glass-Steagall's repealed, going into the dot-com bubble. It cools, right? And then we see it again going into the GFC. We started to see it pick up going into COVID, and that COVID tempered it, but now we're seeing it skyrocket. But yeah, that's kind of what you're looking at there, I think.
It's just super weird
Let
stuff.
me ask you guys how you feel about this, because I think this is something we should discuss, and this kind of relates to all of the stuff we're talking about, and also Bank of Japan and policy. So this is central bank interest in gold and gold ETF flows, and I'll post it in the chat for you guys so you can see it a little more zoomed in.
Huh.
So we're seeing a huge amount of inflow from central banks into gold, which is, I've said this before, gold doesn't ever go up for bullish reasons, not in the history of the shiny rock. And central banks stepping in and buying large amounts of gold is well, bearish. um this implies that there's some sort of currency fear, and it's not only a persistent currency fear, but an increasing one, or a currency stability fear.
Yeah, I guess I just don't know what a central bank is going to do with gold.
They hold it as part of their assets.
Cool.
Yeah.
Yeah, I mean it's not great when you see everything going up all at once together. There's something nefarious going on. I think in general, so much has changed in the last month that we're still just kind of in a period where we're just gonna have to wait and see where things are going to settle down. I think that we are not in a period of very efficient price discovery. We're in a period of everybody's just frantically changing a lot of things.
I have another chart. Let me post it really quick. I think this one is actually this is the one that we kind of, yeah, this is absolutely that. I just found this one. If you guys, there's that chart of like, oh my God, bank losses are so huge.
Yeah.
This is that chart. So you could look at what it is.
I'll pull it up.
Yeah, still bad.
Oh yeah, it's awful.
Fun.
So
Yeah, it's weird that I guess the duration must be really long. We'll see how it progresses, but you'd think that it should spike, but then
You'd think that the constant maturity would roll over. Well, that depends on how many times have they rolled over their unrealized losses, right?
Yeah.
Because if every time they roll them over, they're gonna roll them over into more duration, right? And so there's a very good chance that like that post-COVID era free money duration has already been rolled once, right? And maybe even rolled again after the backstop opened. Because they can't take, I don't think they'd be surviving at this point if they'd taken the losses on the initial holdings, right?
No.
So they must have rolled forward at least once, if not more than once.
Well, I mean,
remember back in August of 2022 when all the banks were like, that's good, like we can stop raising rates now. The Fed needs to stop raising rates or they're going to destroy the economy, right? I think they rolled over right around then. And if you look at yields, like I don't think I'm too far off, right? Like look at the rise in yields into like August. Oh wait, hold on, I gotta go further back. If we look at the rise in yields going into like August of or like coming out of August, right? Like that was the second highest point up until now. So I think they rolled over here. And then they got fucked again in March, right? And then they were really fucked on this one. And that's one of the reasons it turned around so quickly, right? But I think they're rolling that constant maturity to try to trim those losses. I don't think they're just gonna wait it out.
I mean, so let's really think about this, right? So anytime between, let's just say 2012 to, essentially mid last year, if you had bought any treasury that still had duration, right? Like, so if you bought like a 20-year or a 30-year, you are deep underwater right now on that position.
Yeah.
Like every single treasury you bought in that entire time span, that is not something you can just roll overnight. And I like that's the thing is the unwind, like the soft landing. Like it's not just, wage growth outpacing inflation for several years in order to get back to like the long-term trend. It's also the ability for bank balance sheets to be more conducive to risk-taking behavior. Because right now, there's so much collateral at risk that's still like it was going to be HTM anyways, but like now, if there was some sort of liquidity issue, you'd have to realize massive amounts of losses to make up for it. Like so like if they have to realize losses on any of that to deal with, like, let's just say deposit outflows, the losses on those deposit outflows are super outsized compared to where they would have been in, say, like 2017.
Yeah.
Uh,
Yeah.
so that's the biggest issue with the whole soft landing is how do you fix that without cutting rates, you know? And the way you do is let those securities mature. So higher for longer has to take quite a long time.
Yeah.
Yeah. All right. Do we have any more macro questions, or should we move into
I think we could move into SPX.
equities? This was a fun couple of weeks, but I think this last week was quite surprising. So I had been showing for a while, you know, kind of my rationale for why I thought from 45.50 and above it was going to be a grind, and that, you know, maybe we would see like by Jan Opex we would see like a high of 47.20, but it was going to be just a slog the whole way up. And then like last week we basically just like went there
Yeah.
in 2 days or 1 day.
It was one day.
Um,
It was ridiculous.
Yeah, because right before that Fed meeting, we were grinding up right along this stupid curve, this
Yeah.
what I call the big dumb fat yellow line. Like we were just grinding this stupid thing,
Which
and it
is-
was slogging. And then the Fed showed up and said, you know, we're gonna roll over. And then J Powell basically pulled his pants down and bent over, you know, on, you know, live television, and basically just squeezed out that whole position all the way up. So what's interesting is that I was looking at, and I put all this shit on Twitter. Sorry if you don't have Twitter or hate it. It's just a convenient place to very quickly put a lot of information. But
because you're too
interestingly,
because you're too good for the Discord now.
well, yeah, I'll post it there. But the problem is that it's hard to find shit because it's
You have
chat,
to
you know?
you have to have Carl pin it. That's Carl's your bitch. Make it work.
You could just mod me.
Yeah, but then you'll start banning everybody.
Yeah, but it'll be fun for a while, and then you'll unmod me, and then let them all back in, and well, I'll just laugh because we had the great banning. It would be a great PR event, and everybody would have a lot of fun.
Just a real good bonding event.
Yeah. So, I mean, so anyway, so if you look at this, and they blew it out. But if you look at some of the data after OPEX, right? I mean, we had just for context, we had like 1.1 ish trillion in delta fall off of the market, which was about a third, or maybe a fourth to a third of all the delta on the market fell off. I think it's like 40% or 30. I don't remember. Anyway, a huge chunk of it just fell off the market, and that was levered. So the actual contract value that fell off was around 110 billion, and that was about a third of all of the money in all the value of all the contracts. So a significant amount of money fell off. Not much really changed with puts. So I think 4 million puts fell off the indices versus 2 million on calls. But but in terms of leverage and delta, basically those puts are all worthless and they just keep getting rolled. And so what really fell off was leverage on calls. And for somebody who's a bull, you should be a little bit scared by the fact that call leverage has fallen off and hasn't been rolled beyond December, because what that indicates to me is that people are less willing to sell more calls for obvious reasons.
Give me 1 second. I'm just gonna show everybody the effect on delta neutral there. Boop. Okay.
What do you? I'm not on the stream. What are you showing them?
Delta neutral moved up like $100.
Oh shoot! I didn't even look at that. Let me pull it up. Stuck. Here we go.
Yeah, delta neutral went from 44.34 to 45.32.60.
Oh. I didn't even notice that.
Yeah, that's
well, because I've only been looking at Gamma Max because it's like, well, shit, we're actually all the way up here, and I didn't even notice that. Holy cow! Yeah.
Yeah, so
Yeah, that's pretty
my
wild.
question to you actually, with this loss in leverage and then the additional fall off in delta at the end of day Friday, is how much in supporting flows still needs to come in to prevent the mean reversion back to the market maker's hedge? Because I think, and if I've done the math on it right, if we mean revert back to the market maker's hedge, the market maker's hedge becomes flat. So, I mean, if
Yeah,
like,
we're in a really
how do we
tricky
pull
spot.
back without the market maker just absolving themselves of their hedge and letting the market just drop to wherever it falls? Because we're obviously way overextended right now. The market maker's working against longs to the upside.
Yeah, I don't know how much the market maker is working against longs to the upside. So a couple of things have happened, right? I mean, one, we dropped off that huge delta, and we
Yeah.
have yet to see kind of how that's going to play out. You know, where's that $110 billion, right? The $110 billion changed hands and those contracts closed out.
Yeah.
What are the people who made that money going to do? Because it seems like the people who lost that money were people in calls, right? Sold calls, right? And I think the market maker just basically cleaned up. And so what is the market maker going to do? Are they just going to sit on their gains? And,
what if they were spreads? What if they're not selling naked? Have we considered that? Because the breakdown of a spread would affect the hedge far differently, and that might be more in line with what we saw Friday AM, was the breakdown of like bear call spreads rather than the breakdown of just bear calls.
Yeah, I haven't quite looked into all of the mechanics of that. Obviously, it's more likely that a lot of that would be spreads, just from a risk management perspective. I don't know how much of that's really going to change, because I mean, it's still a very similar effect to sold calls. It just basically
Crushes the
effect,
gamma, doesn't it?
So you're selling the closer contract and buying the farther contract, and so the market maker is still going to be long delta. In terms of gamma, you're selling the you're not necessarily right. It depends on where you are on the curve. You're not necessarily selling net selling or buying gamma, depending on where you are. If you're really far out on the curve, then you're probably selling. You're probably net.
I think you're net
I would
short
have to.
gamma because gamma's a bell curve, right? So you're net short a little bit of gamma.
Yeah,
I think
right.
it depends on where you are on the curve, right? Because the maximum slope is like in between the max and the tail, right?
Okay, so if you're selling in the money bear call spreads, you're probably going long gamma.
Oh yeah, in the money, but you know, I'm more concerned with out of the money.
Yeah, that's
Yeah,
what I'm thinking is like the reason for like our grind up is that they're like simultaneously shorting the delta or shorting the gamma by taking the spread, right? And that's crushing the upside gamma, which is, you know, limiting our upside range, or at least like our upside mobility. And then my question is like, when we make a big move like this, right, and the bought and the sold contract both go in the money simultaneously, as that breaks down, right, is that going to push us towards mean reversion? Because the MM is slightly more short delta than they are long on the spread. But maybe that's also why we stabilized instead of just tanking. Right? Because like if all those calls were naked in the money, we should have just dropped like a rock on Friday. But if all of those calls were spreads, then we'd drop like a rock on Monday.
Maybe, but so okay, so you can think about it. Even if it's a spread, right? The market maker is still going to be basically long long a bull spread. And so the hedging, they're not, so, you know, I've been trying to think about what would I do if I was a market maker. If my position is net green, why the fuck would I hedge away profits, right?
Yeah.
In this environment, regardless of whether the market maker bought a call or bought a call spread, they're not hedging up here.
No,
right?
yeah, that's
Very
that's
little.
part of the thing. That's why I was saying there's no market maker support for the upside.
Right. There,
Right.
and so that's, so you can, right. So you can basically, you can basically try to push it up by selling puts, like you know, they're continuously rolling and selling these puts, which continues to you know,
Pinfall.
push up, pinball and push up from the bottom. And you've got all of these sold calls that are then now getting squeezed out. That's
Well, part of the
creating
advantage in pinning vol is that you keep the market makers hedge by like you split the focal points on the hedge, right? So if you're to the upside of their break even, then the market maker really just doesn't need to do anything. But if
right.
you start to move to the downside of the upside break even,
The market maker
the
has
market
to
maker
buy.
the market maker sells everything, right?
No, so in this case, they would have to, so they would have to buy, and we're seeing that happen, right? I mean, like these
Well,
ridiculous like
they buy
turnarounds.
until it falls below the break even point.
No, not the break. So above the break even point, they're doing nothing. Below
Okay.
the break even point, before you get to the maximum negative, they're buying into it.
But what if there
When
is
you
but if vol goes up, there is no negative, right? So they just don't do
sure,
anything all the way.
but in a static world, yeah, they're roughly, and that was like how I was talking about before, why the 45.50 was such an important level, was because that is the point where the market maker flips and starts to sell into declining prices, because their negative value goes down. And then once they get down to the bottom of that and their puts become in the money, then they just let that bad boy ride, right? Just like they're doing here on the top side. And that's why that's why like the flip between one or the other is so powerful, because the market maker literally is going to flip from working against price to working with price. And then
So
we
then
get to the other
market
side.
maker, and this is kind of what it was all leading up to. So then market maker Vega neutral moving above gamma max means that the market maker is going to start to unpin the vol themselves, right?
They might, yeah.
Because that did happen Friday.
Yeah, we're getting to a point where the market maker is so long that they're just not really, they don't really have like the okay, so let me try to say it in a clear way. So the market maker is profitable, has no reason to hedge,
Yeah.
right? And people are selling the market maker calls, so they're getting even longer, right? So what that's going to do, what that does though, is that it drops the um, gamma on the position, right? And so what I think is going to happen is, and I think this happens.
When the gamma
So
falls
here's,
off, that means that vol's gonna go up.
yeah, I have to think a little bit more about the dynamics of what Vega neutral and gamma max, particularly those two things flipping, means, just because we haven't spent a whole lot of time in a regime like that. But
I've been trying to think about it a lot too.
but here's what I think is going to play out in terms of delta and gamma. So, and this goes back to the fact that the primary thing that changed after December Opex is calls dropped off, and the call delta and the call leverage dropped off, right?
Yeah.
So what that tells me is that there's going to be fewer sold calls to the market maker, which means the market maker is now less long on the call side.
Yep.
And what that's going to do is that's going to decrease the amount of positive gamma that they have, right? So, or another way to say it, it's gonna make gamma more negative, which will increase volatility, right? So the fact that the calls are not being sold as much as they were before will actually increase volatility.
Yeah, because
So far,
the
we've seen
MM's
all of our
now more
so far we've
exposed to
seen all of
Vega.
that. So far, we've seen all of that volatility going to the upside. I mean, look at you cannot look at the chart and say we went up from 4,100 to 4,720 in a matter of like 40 or so trading days and tell me that volatility is low, right? Volatility is extremely high. It's just all being met on the upside. And so because of that, this dynamic can continue. But now that the call sellers have gotten so burned, and all of these older calls are falling off and not being replaced, that's the key. We'll look to see if they'll be replaced going forward, but it doesn't look like they've been smoothly replaced, which means people are moving out of selling calls. They're sick of getting burned. They don't want to get burned anymore. What that does is now that decreases the amount of buying that the MM has to do on the downside, right? So we should be able to hopefully see fewer Vs or less intense Vs going forward. That's the hope, right? But what's interesting is that put selling has not subsided at all. So if the puts continue to sell into this environment, what's going to happen is it's going to first push us up until the point where the market makers biggest loss point shifts above spot, at which point they now go into selling into dropping prices. So because they're so long puts, right? They have to, and so what's going to happen is we will go up and then we will go way down.
Has your favorite French pastry refined his predictions, given that all the flows he expected blew themselves out on Friday?
I don't know. I don't know what he's. I think everybody was surprised. I think they were thinking that this would take more time. I certainly thought it would take more time.
You know what I'm interested in right now is that 3-month vol is rising.
Yeah, that would be interesting to see how much of that is puts or the lack of calls, right? It could be the lack of calls being sold.
Yeah, it started to turn around on Thursday, and it's been picking up quite a lot of speed. Even against spot vol dropping, we see 30-day vol rising or 90-day vol rising.
Yeah, so I mean, what you want to see for us, it seems really paradoxical and backwards, but what you want to see is everybody and their mother FOMOing into long calls, which just vaporizes the MM's long call position, so they no longer care about the upside, and then all that's really left is this massive long put position, at which point they have to start just hedging down massively to get those puts in the money. Another way to think about it is, if you were a market maker and you had infinite power to manipulate the market, first you would just shoot the market straight up and get all your calls in the money. And then once those expire in the money, then you shoot the market all the way back down and get all those puts in the money. So that's kind of what I think is going to start happening. When that's going to turn around is hard to say. It depends on how aggressively people buy calls, how aggressively people get out of their short calls, and how aggressive the continued put selling is. Yeah, I mean, in terms of upside, it's hard to say. We're always guessing on market maker hedging. Maybe if we just keep grinding, Jan Opex, we see 4,800, 4,820.
Even that seems far out of reach right now.
But it seems, it's all a question of when's the flip going to happen, right? Because you still have to bring in a lot of sustaining flows.
I wish one of these
this
days
up.
we could figure out if Gamma Max on SPX is truly a limit or if it's just theoretically a limit. I'd love to just test it once. We've come so close. And I just want us to like slam into it full speed and see what happens.
If you're using leverage and options to push the market, I find it hard to see how it could go much higher than that.
Well, theoretically, you should be able to hit the derivative maxes, right, above Gamma Max, like we see on GME, or we see on like smaller, less liquid instruments, right? Where Gamma Max is exceeded briefly, as like the gearing effect plays out. But on an index that's entirely driven by options, it seems like Gamma Max is just impossible to breach.
Yeah, I mean, and we certainly have seen it touch, but never go over a couple of times.
I mean, we've never even touched it on the on the monthly contract.
On SPX contract? Yeah, we touched it in July.
So we touched the prior days. We touched the prior days, right? In July. So in June we missed. In July, I think we just almost tapped it, but it was like we went above the prior days, right? Because we're always looking at the day prior.
We got real close to it. I viewed the line as a fuzzy line.
Yeah, we were like $5 off though in July. Like that's the closest we've ever come.
Yeah. No, I think it would be very difficult. You'd have to have like legitimate buying of the underlying, like massive buying of the underlying.
We saw that with the ETFs on Friday. Did you see the fucking buy-ins? Did you see the end of day buy-ins on SPY?
Yeah, I did.
Jesus Christ. And I think we started to see like Vega squeezing out a little bit too in the midday Friday. And like we started to see vol pick up and we started to see, we started to move towards that like 4,700 price point. And then they just bought the ever-loving fuck out of like QQQ, IWM, and SPY. I mean, like 20 something billion in flows in the last 5 minutes of the day. That was nuts.
Yeah. And these are the kinds of things you're looking for of like, when all those options expired, where's that money going to flow? It's interesting to see that it's flowing in the way that it does. So, I mean, going forward though,
but the kind of an ironic situation that if they redeploy that capital back into the long side of indexes, they're more likely to collapse the index than they are to pump it.
Yeah, you'll see all sorts of things where people say like, we can't collapse until people stop shorting it. That's actually kind of true, and that's a dynamic that I just described where it's that short gamma on the call side that's actually kind of keep continuing to fuel the propelling upwards, and it's when you stop shorting calls that that flip occurs, right? And then you careen downwards into all those sold puts. One day. Well, yeah, like we're in like ultra gamma max mode. Like fucking everything's a gamma max.
Yeah.
I mean, it's just wild. IWM over gamma max.
It's been over gamma max for like a few days too.
Yeah, just blew right fucking past it.
I've been playing the mean reversion on it, and like from tests, like high tests, 200, 201, whatever it's testing to the upside, but it hasn't actually pulled back to gamma max yet. So I keep getting like a little bit burned, hoping it'll keep dropping.
Yeah. Well, so a lot of the delta on this has fallen off.
Yeah.
So I expect unless they roll into it, I don't see. I mean, there's a lot of money that would have to go back into it. It's still very bullish, but they lost a significant amount of that. So we'll see where it goes. Again, we just have to see where all this money is going to flow. to the tune of $1 trillion leveraged that wasn't there before, or that was there before. Where is it going to be redeployed? Is it going to be redeployed to the same level of leverage? Or are people just going to take profits and move into treasuries or something else? I don't know. We just have to watch. But my inclination is sold puts will continue. Vol will continue to get crushed. People will be dismayed. Bulls are going to get so over the top bullish that their eyes are going to be bloodshot, and their dicks are going to be raw, just absolutely shredded from just the skin just sloughing off. And then we're going to just drop.
So Sisyphus is yelling at me. I was curious if you guys heard about the Fed extending SRF to Japan banks as of Friday.
I don't even know what SRF is.
Did they? Hold on.
So while you're looking at that, another thing I'll say
shit.
that
they did.
Another interesting tidbit of options, I'll just say real quick. Vega exposure is systematically dropping over time. So it actually peaked in September, and it's been slowly bleeding off in a very oscillatory, noisy fashion, but it's been declining.
Yeah.
So whoever was going long Vega is definitely slowly moving out of that, which is another. And I think, again, a lot of that we've been experiencing from the yes, short Vega, right?
Yeah.
They're getting out of their short vol positions.
Yeah.
And so I think that's notable. So far, again, we've only seen that to the upside, but that's just another confirmation that vol's going to go up soon, and it's bad for bulls mostly at this point.
So yeah, I guess
anyway,
I guess I should bring this up. So the Fed established a standing repo facility for $500 billion, operated by the New York Fed, between the Fed and Japanese banks, Norichuken Bank. That's really interesting. So they've been added to that bailout facility. 708 billion in assets. So if they were a U.S. bank, they'd be the 5th largest by assets, just behind J.P. Morgan, Bank of America, Wells, and Citi. That's fucking crazy. I didn't know they did this. Seem to have REIT creep, right? Yeah. Oh, interesting. Are we trying to pad the backside of the fucking carry trade blowing out?
Like it's already blowing up?
Maybe. Nikkei issued an interview in March of this year with Norichuken Bank Chief Investment Officer Hiroshi Yuda. Said this: "We're hit with unrealized larges, largely in U.S. government bonds. We actually started to reshuffle our bond holdings in 2021 to prepare for rates to rise, but we rushed to unload in response to the jump in 2022. We sold around 12 trillion yen in securities, mainly U.S. government bonds, in the April-September half. We've continued to sell since October. At today's conversion rate, dumping 12 trillion in U.S. bonds amounts to dumping $84.6 billion. The U.S. government bonds are sold in large quantity. It puts downward pressure on the price of the secondary market. We're also grappling with heavier unrealized losses on government debt securities. It has not yet dumped into the market, but is maintaining on its balance sheet. According to the fiscal year-end statement linked above, fiscal year-end March 31, 2023, it had unrealized losses on investment securities of $20 billion, which netted out to a loss of $10.76 billion after adjustments. They become the lender of last resort to trading operations around the globe. Huh. That's very odd.
Oh, JFresh. So SRF is the supplemental repo facility, and
Yeah, I don't know what that means. I'm not I like options. I don't want to try to be a man who has all the answers. I'm perfectly fine being an expert in a few things. I don't know what the implications are. Obviously, it sounds like a big number, but I have no idea what the dynamics are behind that and what the implications are. So I couldn't even begin to speculate meaningfully. I can make up some shit if everybody wants me to.
No, you're good.
GME to the moon.
Yeah. But yeah, so if you guys have heard all the crazy noise in the background, we've got another holiday party being hosted at my house, and it's a Mexican themed. So I want to get wasted on margaritas if you guys don't mind.
So this looks like massive losses in CLOs.
That's exciting.
Yeah. So basically, the Fed's trying to stymie the sell-off of like collateralized loan obligations. That's curious. And they just stepped in Friday. I guess yeah. If yen goes up, U.S. banks are gonna need to sell those.
for an entity that seems so intent on crushing leverage to get inflation under control, they're doing everything they can to prevent that from happening.
Yeah, if you look at the carry trade, it's collapsing at like three times faster rate than it was in 2007 on the weekly time frame.
Yeah, I love that. Let's burn it all down.
Yeah. So it looks like the Fed's trying to backstop some volatility there in the CLO markets. I don't know how.
Let's crush it and get Glass-Steagall back on the books.
Right? That's what I'm saying. Get these fucking investment banks out of the day trading game.
I'm leaning pretty heavy on Elizabeth Warren to try to push some of that narrative, because there's a bunch of mongrels in Congress who will have no idea what to do.
Yeah.
All right, let's get our SPX thing done.
I won last week by default, just by being closest.
Jesus, but you were so far off.
I
don't know if you win by being $100 off, but all right. Are we projecting the same up into Gamma Max?
I was going to be nailing it until that Fed meeting. I was like on track to just absolutely nail it.
Yeah, the Fed meeting fucked you. Well, to be fair, if the Fed meeting was hawkish, you also would have gotten fucked, and me and Dork would have been right. So, it's...
I was predicting it to be a Goldilocks because we were already just grinding along that big stupid line. But now the line has been blown out, so I'm going to say we're going to close the week at 47.20. Just flat.
Just actual complete flat week?
Yeah.
Oh, you bastard. All right. I'll give it to you. There you go. You got your flat week.
Yeah, I mean, we'll undulate, but we're going to be held up.
Ooh, undulate. I love the term.
It's just going to be an awful week. Everyone's going to hate it. We're all going to be falling asleep at our computers.
Oh, no. I don't want to do that. All right. Dork, give me something spicy.
Okay. Well, do I get to make the Opex prediction?
Sure.
All right. Monday open down 3%.
What? 3? or 0.3.
I'm just kidding. I was just saying OPEX equals market crash. No, we'll open flat and then probably down to 4650 by Wednesday, and
Okay. Oh.
then back up to 4700 end of week.
Okay, so 4650 end of the week or Wednesday,
No,
and then
4650 midweek, and then 4700 end of week.
all right.
I'm just gonna not even look at data and just say we're gonna go down and then we're gonna go up because we had the OPEX. There's gonna be some de-hedging, and then that's just gonna roll because fuck this market.
Yes.
I like how we're all just getting lazier with our predictions.
I mean, I'll try not to. I think we're gonna pull back to like 46.75 tomorrow. I think that can continue. Tuesday. That can probably continue down. Well, actually, if vol spikes there, then we could see like bigger drop. Hmm. I'm thinking something like that. I think we drop off over T2, little rally into PCE, and I think PCE is not everything everyone wants it to be, and we fall off a little bit into the end of the week.
I'll take that.
Although I do think there's a
Wait,
chance
when do
that
we get?
I think there's also
do
a
we get-
chance that we just slip mean reversion and we just fail and we just keep dropping until we hit delta neutral. But I'll try to hold off on my bearish feelings. Mostly I mostly agree with Jay Fresh this week. I just don't want to predict the same thing as him. Like I just want to sit here and sell covered calls above gamma max and ignore everything else that's happening.
Wait, we're getting quarter. PCE is just quarter over quarter revision, right?
Yeah, we have PCE on Thursday or Friday, I think.
Oh, you're right. On Friday.
Yeah.
Cool.
Yeah.
That'll
Yeah.
be fun.
Yeah, core PCE.
Oh, they're expecting some.
Or, Yuta just
cold,
crashes
cold.
the market tomorrow night.
Yeah, lots of fun. Definitely don't hedge full bull. Full leverage. Sell naked puts. They're free money. Nothing will ever happen.
Could UST yield collapse as a flight to safety from banks? No. It would be the opposite.
No. Yeah. Because you put the money in the bank.
If Japan starts dumping US treasuries, yields are going to skyrocket.
Yeah, no. I don't think a whole lot's going to happen in yields until RRP runs out, which is going to happen like March-ish. That's when yields start going up.
Japanese officials also said under 4%. Yeah, the US 10-year under 4% is a big trigger for them. All right. Well, that's where we're at. I mean, we'll see how it plays out. I kind of hate these things because people lean on them too much. But
my favorite part is that we're all just very slowly getting more bullish, begrudgingly, and I'm just imagining that we're about at the point where you get like the opening scene, the opening scene play out on Always Sunny in Philadelphia, and then it switches to the title screen and it just says the pickle jar gets bullish.
I mean, I'm not more bullish, right? But I'm also just not gonna like. I'm not just gonna sit there with my thumb up my ass and hold puts while the market's rocketing, right? But
Have you tried it? It's not the worst thing in the
it's
world.
terrible.
Putting your thumb in your ass?
Oh no,
It's,
no, I meant holding puts while the
clip your
market's rocketing.
fingernails first.
Holding puts while the market's rocketing. Don't try to bait me into that conversation. But at the same time, like, what am I buying calls for? Like Friday, I got a straddle, and I'm 1 to 3 calls to puts, right? And I'm like, I feel like there's less hope for my call side, but I also feel like there's no hope for my put side. But they're so fucking cheap, I have to buy them, right? So I mean, that's what I would say is the best thing to be right now is just neutral. Long and neutral, right? Because options are cheap as fuck. You can buy straddles every day for nothing. One side of it's gonna print, right? Who gives a shit what, fucking the market's reaction to data if you're gonna make money whichever way it moves. You just care that it moves. And it's a much better position to be in right now, especially with like realized vol literally in the gutter. And realized vol 30 days, what, like 7%? So like, yeah, I mean, I had straddles all week last week. It was awesome. Friday on the back of, hopeful feelings about charm falling off, I levered the put side a little harder. That paid off, right? We had that nice drop to like 4,700. I levered the put side harder again today, going into tomorrow, but I think that's it. It's just like have a straddle and then just wait it a little, however you feel,
Yes, the important piece of this is that you are trading based on your feelings.
Yeah.
This is the key to success.
Yep, we've reached peak market hubris, and so like don't assume that any direction you pick will be correct, because it probably won't be.
Yeah. Also, we're completely untethered from any macro or fundamental
well, what matters anymore?
No numbers matter.
Yeah, like if it's bullish, like the market's gonna go up $20. And if it's bearish, nothing's gonna happen. They're just gonna short vol more.
Yeah. Flacking.
So
bear put spreads to the moon, or sorry, bull put spreads to the moon.
Bull put spreads. Yeah. I like credit spreads here. Like bear calls above gamma max have been nice.
The fact that people are pulling out of bear call spreads now makes me kind of think that might be the trade going forward, because it's gotten smoked so hard.
Yeah. Well, I mean, I'm just selling them above like monthly, so I'm selling them like 14 DTE above monthly gamma max, and it's just been free money.
You can't go tits up.
Yeah, you can't. Like, where's the market? The market can't go higher than that, right? If gamma max moves up, I just roll them up a little.
Yeah. All right, I'm gonna go get drunk.
Yeah, do that. I'll see you later, man.
All right, yeah, always a pleasure.
Thanks for being on. You too, Dork.
Thanks for having us, bud.
You got it, dude. I'll see you guys later.
It's one of the joys of my week.
It's fun to do.
Yeah. All right. See you guys.
Later, guys. BOJ. Okay, so you've just been going on and on and on, Sisyphus. Jesus Christ, man. Stop trying to predict it. Just see what happens. You're gonna drive yourself nuts trying to figure out what they're gonna do and diving into the behind the scenes, political drama of the Bank of Japan. What about T+2 settlement? SPX ripped 2.5% last week. So, I mean, T+2 on indexes, I don't think it's ever been a reliable indicator of what markets are going to do. First of all, MMs on when they're taking risk like they are on things like SPX and SPY, they're not waiting till T+2 to hedge that risk. Right, they're rebalancing their gamma intraday. They're rebalancing it end of day going into the next day. They're not sitting on huge amounts of like gamma variance over multiple trading sessions. On GME it doesn't matter, right? Because like or something like that, because you know the total risk they're taking is nothing. But on like SPY, QQQ, SPX, they're not gonna fuck around with that. If you're wrong for 2 days, you can blow up your whole fund. It's way different. So I don't think T+2 settlement really matters there. It'd be a shame if IWM breadth catches up more. I don't know if it can. IWM's kind of in a similar position. It's even more blown out than SPX, actually. So like I can see it trading flat until, you know, more interest moves higher on the chain, but I don't really see how it goes up more. Did you talk Fubo? I don't know. Probably not. We good. Maybe it'll run for Opex. I don't know. There's a little bit of covering. They've been trying to short it. They've been largely unsuccessful, but if Russell has another bad day, they'll be able to bring the price down more. So be aware of that. It's not like over short, right? It's not super illiquid, but it's not very liquid either. It's kind of just in between. And in the past that's led to like small price improvements, right? Where we haven't had like a crossover, but we've still had, you know, some covering. Right, so we might have like a little bit of upside range. I just don't think it's like I don't think we're gonna get something crazy like last August or something like that, right? Like it doesn't seem well set up for that. But if it breaks 4, maybe it just keeps going. I mean, there's a lot of leap interest. There's not a lot to stop the price from improving if they do start covering. I would imagine that the total volumetric short is quite large, even though that hasn't tied up a lot of liquidity. Fubo's very liquid, right? It's got a huge float. What's it at right now? 281 million shares. Why don't T+2 matter in a dispersion trade? Delta's falling off the underlying equities. It should affect the indexes. I don't think it's going to affect hedging very much though. On the indexes, like I don't think they're going to leave. Like sure, okay, there'll be some. Even then, like I don't even think T+2 matters that much on like Apple and Nvidia and stuff. Like those are mostly they're mostly caught up on the hedges there. They don't really fall behind. They don't allow large gamma imbalances to build up, generally speaking. I mean, there are moments where I've seen like Tesla have very large gamma imbalances, Nvidia a couple of times, but like Apple almost never, right? You rarely see it in SPY or QQQ. You almost never see it in SPX. So even if that were the case, diminishing returns as it moves through the hierarchy, right? Any thoughts on ethanol markets? Not really. GPRE caught my eye. I didn't see the previous question. I just don't really have any thoughts on it. Why bullish on ethanol? Like isn't ethanol really only bullish if like corn harvest is down? I don't think that's the case right now. We've had a pretty wet year, right? Okay, my last question to BOJ, but I'm wondering what Powell's Fed moves might imply for them. I mean, they can't. Here's the thing with I don't think Yuta can rely on JPOW to close the spread. I think he needs to do it himself. I think JPOW's partially relying on Yuta to do that. Like financial, if Yuta moves forward to the positive rate, financial conditions get really tight really fast, right? And the Fed doesn't have to do shit. The Fed can just sit at 5.33. In fact, they could start emergency cutting. If he moves to like, what if he pegs to the dollar, right? Like they could just emergency cut. They can bring rates down to 4%. They'd still be more restrictive than they are right now. The market would crash, but it'd be restricted. We'd still have restrictive rates. I can check out GPRE if you just remind me, Poopy. I'll look into their financials and stuff. If it's just like a strong company with energy exposure. I feel like I've got all the exposure I want on energy. I mean, I've got like Oxy, I've got BP, I've got Devon, I've got I've got uranium exposure, right? Didn't I just pick one up? What the fuck did I just buy? I feel like I just got gas exposure, but I can't remember what it was on. UGI, right? Something like UGI, yeah. Sorry, I couldn't think of their ticker. But yeah, I don't know. I'm pretty happy with that. I still don't want to get any tech exposure. And I'm still pretty happy with the fact that I sold my tech back in June and July. So, I don't know. I'm mostly just sitting on like yen longs right now. I'm still long TLT, but that may not last. Those are up, so I might be closing. What I might do is I might close some of that. And then let some ride, but I want to start building back into a short TLT position, especially as the 10-year slips under 4%. And then I don't know. I've been trying to find some companies that I'm interested in if yen, like Japanese companies with high domestic exposure is something I'm really interested in. But I need to dig into that a lot more, and I've been kind of lazy on that front. Takeda was one, but there's other ones I'm interested in too. More in their financial sector that I'd like some exposure to, because if yen rockets, right, they're going to be a beneficiary over 5-10 years. Gold, I mean, there's intermittently, I think, good deals on gold. And then probably if you can find good value small caps. But I'm still not sure that good value small caps are going to beat yields on UST, right? Despite all the Buffett brokerages now, Yeah, I don't know. I don't know about that. TAC is it a nice price? Is it close to my target? Hold on. Fuck off. Okay, so it's getting there. Yeah, I still probably want to wait till earnings. I think this can keep, even if yen goes up, I think this can keep dropping quite a bit. And honestly, like, if yen gets blown out, Nikkei is gonna crash. And then, but I just want to be like prepared for that. I'm like, either I'm gonna go, maybe I'll just go long Nikkei. Fuck it. Just go like long Nikkei futures and roll them out as I need to. That might be something. Anyway, all right. Thank you guys so much for tuning in. I appreciate you all hanging out. If you have any questions, I'll be sitting at the computer all day, so feel free to hit me up and ask if I didn't get to them on the stream. Pickles Picks will be out tonight, and I'll see the rest of you tomorrow morning. Later, guys.